Saturday, May 7th, 2020. Just north of $2 billion worth of UST was unstaked, ripped out of the Anchor protocol. Immediately, hundreds of millions of it was sold. Whether or not it was a sell-off due to the volatile times, or whether it was a coordinated attack upon Terra's system is a subject of debate and remains to be seen. The sudden sell-off knocked out the support, and the price dipped to 91 cents. Quick-fingered traders attempted to profit off this drop and fired up the weapons of arbitrage warfare, trading 90 cents of UST for $1 of Luna. But the plan was flawed. A bottleneck was discovered. Only $100 million of UST can be burned in exchange for Luna in a 24-hour period. Investors were trapped on a rogue ship, headed straight for the rocks, with only limited lifeboats available. Already shaky at the knees from current world events, investors scrambled to sell their UST. Their ship had failed. The rocks were bearing down upon them. The anchor had snapped. The ship listed from 50 cents to 30 cents as investors now trapped tried to shore up the price. But alas, it was to no avail. A once glorious market cap of $18 billion was now reduced to the rubble of a mere $2 billion at the time of recording. And the Luna holders fared the brunt of Davy Jones' blockchain, their financial bodies strewn wide. Luna's value is all but gone, from a peak of almost $120 per to now less than a penny. But out of all this disaster, out of all this red, out of all these ashes, a phoenix rises. Cryptocurrency regulation. Janet Yellen herself, someone who had said that she was definitely against cryptocurrency, is now saying that this example is simply an illustration that stablecoins are a rapidly growing product and that there are rapidly growing risks. Because this tragedy happened and because so much money and so many ahs and oohs happened and so many hearts stopped, cryptocurrency regulation is one step closer. There are some interesting things, I think, that kind of caused a lot of this. One of the things was Luna. What were they thinking? The Luna Foundation Guard had purchased around $2.3 billion worth of Bitcoin. That was in the event of a depegging. Those reserves were supposed to be sold in case of a depegging, so that way it would shore up the price and bring liquidity to the project and therefore bring UST back up to $1. So what happened? Well, Bitcoin happened. You are purchasing Bitcoin to shore up your price in the case of a fall, but Bitcoin leads the market. When Bitcoin is up, the market is up. When the market is up, Bitcoin is up. When the market is down, Bitcoin is down. When Bitcoin is down, the market is down. Bitcoin is the market leader. You're trying to shore up your project to $1 with a project that is the leader, no matter which direction. So I presume that you had purchased this Bitcoin in case of a market crash within the cryptocurrency world, which is what happened and which was what would cause a depegging. But Bitcoin would crash at the same time, meaning that $2.3 billion in Bitcoin that you purchased, shore up your project to $1 using Bitcoin that you paid $2.3 billion for, Bitcoin has crashed. The price of Bitcoin, there is a fundamental issue there, and there always has been. That makes zero sense to me on why they did it that way. You are shoring up and hedging against a crash where if there's a crash, Bitcoin is the leader of the crash. Bitcoin runs the market. The Luna Foundation Guard is also under question on how they may have even used the money in the first place. On one day, May 9th, $1.6 billion worth of Bitcoin was sent from one LFG, and that's the Luna Foundation Guard, to a Gemini wallet, a crypto exchange, which is weird. If you're shoring it up for your project, shouldn't it be vaulted away? I mean, it's bad to shore up your project with the market leader anyways, because if it crashes, Bitcoin's crashing. Your value of Bitcoin to shore up your project is less. It makes no sense. And then another $875 million was sent to a wallet on Binance. So what gives? What happened? Answers will be found. Do your own research. Look into it. Take a step back. Don't FOMO into anything. You are smart. You are valuable. There's a lot of noise out there. There's a lot of distractions. Not financial advice. I'm not a financial advisor, nor would I ever wish to be one. I am someone who has been beat around, and I've sailed these financial seas through some pretty rough waters, and I've seen a few things. And it doesn't make sense to me. It just doesn't make sense. You're going to shore up your price with something that is the market leader. But it's the market leader. No matter which direction, being a leader doesn't mean you're always successful. You could be the leader on a downfall, too. It doesn't make any sense. And here we are, in a beautiful place, because all this is going to push regulation. Mark my words. Regulation. Out of disaster comes the good. A lot of money is made in times like these, when the world is ending, the sky is falling, everything is going to zero, and nothing is ever going to recover. Because we've been here before. This isn't the first time. This won't be the last time. And every time before, it has recovered. I guess it all depends on how much faith you have in your project. And the number one key that I can never, ever stress enough. Never, ever invest more than you can comfortably lose. That's the key. And patience. I thank you for your patience. You guys are amazing. And I will see you guys on the next one. But be careful out there. Until regulation happens, it truly is just barely better than the Wild Wild West.